If you are a shareholder of Visa or MasterCard or American Express, we will have a look at what's going on now when Trump is trying to do something about the duopoly, perhaps. Will there be more competition, or what's going on right now today? We see that the stocks are falling a lot in price. MasterCard down 5%, the same almost with Visa, but not with Amex that much. So what's going on? What's the difference? We'll have a look at that quickly here. And we also see that the Baba stock is up substantially, and they also have a payment network here. So what's going on? We'll have a look here, and I'll give my opinion and some insight. I follow all the stocks myself. And if you're new to the channel here, welcome. My name is Eivind Kallevik. I really love to look at these really great companies, and we try to monitor the best of the best that have durable competitive advantages. And we have meetups here if you would like to join us on Tuesdays. We try to get these, try to be patient and wait for some kind of event, and try beforehand to see if these companies have indeed a durable competitive advantage with all of that good effects that we get as long-term shareholders here. And will we continue to earn high returns in these companies, and can we get the shares cheaply? So I'll show you MasterCard. It's trading down at pretty close to the cheapest it's been, but maybe the growth is getting slower. And I'll also share with you some insights I have into American Express and why I think it is a better company and a better, even though the growth in earnings is not that high, since they're buying back more shares, maybe the shareholders will be better off in the long term, even though MX is smaller compared to these two big guys here in the duopoly. So let's have a look. I'll scroll through here now, so you can pause the video and look at what the Gemini has to say about the competition and what is the Trump administration doing. And I'll give you my insights right away here now. So just, if you want to read it, feel free to pause. And I'll go through and show you what I think is going on. Okay. So these companies, as you know, you're probably a shareholder here, they have grown enormously. Like the earnings per share and all the fees that they're generating here is, of course, there are more and more cards, but they also have a very high fee on every transaction, effectively. So what they want to do is to try to stall or to make it more competitive in the market here, to allow that the banks, they have to have at least one more card company, try to make it more, to break the duopoly. I think at least this is what they can do in the Americas, and in the United States, I think the revenue from these two cardholder companies here, they are roughly 40% of the revenue. So that's how much it impacts if they want to slow down the growth. If they want to make it easier for the competition to compete here, maybe the Alipay is a good candidate, but there are other companies as well. Maybe American Express gets more headwind. I'll explain why. Not headwind, but more the opposite. I mean, they get more. They get more value for the shareholders and for the members in the Amex, maybe. So I'll share with that. I'll share that with you shortly. Okay, so then with more competition, and maybe they even try to have not let them have that big fees. Of course, that impacts the card companies here a lot, but also that they also want to reduce a cap proposal on the credit card fee interest rates. How much can the banks charge the American cardholders in interest on the loans? That's a big deal. Of course, it's very good for the public here that have credit card debt, but it's not really that bad for the Visa or MasterCard shareholders, in my opinion, because they are not lending out the credit. They don't even issue the cards themselves, but they have the banks that do this, and then the banks will have lower interest on the lending here, and they might not be so keen on issuing the cards. Maybe that's a bit of a headwind for the companies here. But if you look at the income statement and the segments of Visa and MasterCard, they don't really have revenue in terms of interest. But we have interest income in American Express because they issue their cards on their own themselves, and they also have interest income for the members and the cardholders. So there, I think we will see then it's just temporary, but we'll see. Maybe this is a trend, but it's not as big impact on Amex. If you look a few steps ahead here, I think that maybe even more members of Amex will be happy to be members now because the interest on their cards will be lower, and maybe more companies. Maybe more people who have cards will prefer Amex because they also get a lot of membership perks here. That's my guess, and I think that the value is increasing. And you see that the Trump administration, they mainly try to do more competition and break the duopoly of these big guys, Visa and MasterCard, but Amex is not directly being affected here. What happens with Amex in this regard? Ironically, Amex is charging a higher fee, but they don't have that much volume. It's more like it's more like a membership business where let's say the whole group of American Express cardholders, they when they use the cards at the hotels and at the airline companies, the merchants of these businesses and the hotel owners, they have to kind of accept is it 50 basis points extra in fees, 0.5%, compared to a Visa or a MasterCard cardholder. But they have always been able to do this because the membership group of American Express is such a big group that the hotels, they don't want to lose this one because they are typically buying more hotel, more expensive hotels. They travel more. They are more incentivized to use at least 50 or 75% of the card when they are traveling to get insurance that Amex is offering and providing to the members. So you see here, according to Gemini, it says that there's an Amex loophole. It operates as a three-party model. It's kind of the whole package. It has the process, the networking process, and the issue of the cards, and also the lending. But they think that it will probably be exempt from this act here, and maybe American Express will have an advantage over the biggest rivals because American Express will remain untouched if they offer if this swiping fee revenue will be lower, but Amex does have a swipe fee, but maybe it's mainly Amex. I'm sorry, MasterCard and Visa that they will target. Okay. Yeah, so according to Gemini, they likely Amex will not be regulated this way, and that's great. And they can keep these high fees on every card, and maybe we are better off in American Express then. I'm curious to see the segment of Alipay and how much will they be able to get into the American market or in Europe. But this is mainly about the Americas. But yeah, if you want my opinion about American Express and the two others, I think that American Express is the better company because it has a very valuable membership. Yes, they might lose some interest income if the interest will be capped at the 10%. But the revenue is mainly from the membership fees and the payments, and you see here that if you have a look at the average fee per card, you see that as the members grow and as the membership fee per card is increasing, that's very good for the shareholders. You see we have a very good trend, and if they have less revenue from the interest, I think that the value for the membership is even better. So maybe more members will be incentivized to join the American Express membership. And you see the revenue from you can see it here. Of course, United States is the biggest part of the revenue here, but yeah, we don't really have a big impact, I think, on the interest fee. And if they can get as high a card fee, I mean for the payment network as before, I think that American Express is the stronger company. And you might see that, of course, MasterCard and Visa, they have had much higher profit from operations increase. Let me show you here. You can use and compare the companies in Fiscal, which I recommend and use all the time. I think this is a great platform. But you see here then, the company has not really more than doubled its profits over 10 years, which is not that great, but it's I think this gets stronger and stronger over time. And because maybe counterintuitively, since the share price is always cheap, in my opinion, has been for a long time. If you look at the net issuance of and repurchases of shares plus the dividends, you see here that a big part of the value increase to the shareholders is coming back as repurchases of the shares. And then it's an advantage for us if the share price is low. So let's hope the share price drops a lot and we get more dividends. And more dividends per share if they keep buying back shares. And also you can also measure it in terms of earnings per share. If you believe that most of the earnings here, or maybe all of the earnings per share has equal value to the shareholders. So you see that the earnings per share has been tripled over the last 10 years. Even though the operating income was only doubling. And that's because they buy back more shares. So you see, from 5 to 15 in 10 years. Okay, so my favorite is American Express because of the whole, what is it called? All of these good effects. It's a strengthening flywheel. The members get more and more value. If you don't believe that they get more value per card, or per membership, then why does the average fee increase so much? This is what the members are voluntarily paying to be a member. So I believe that every member they're increasing the value of every member. So that's a very important key performance indicator. You see over 10 years it has more than doubled, and I think that this will get even stronger. As the membership grows and the members grow, they get and keep this kind of a bit exclusive brand and customer segment. They will be a very, very strong purchasing group that all the hotels and everyone, they don't want to lose this group, even though they have to pay a 0.5 percentage point more when they use the cards in their hotels and in the merchants. And by the way, you probably know that Berkshire Hathaway is owning 22% of the company, according to this overview in Fiscal, and it says it's 20% of the portfolio, but they also Berkshire Hathaway has more than just their stock portfolio, of course. But so it's I really love the company, and maybe have a look at Berkshire Hathaway also, because the Berkshire Hathaway has a stock price or share price that hasn't really done much the last years or so. So if you want to own American Express indirectly, you can do it through Berkshire Hathaway, and that's my biggest stock holding myself, and I really love American Express also. So let's hope the shares are falling more in price next year, so we can buy more earnings. Yeah, so hope you liked the video, and hope you see you in the next one.